much debt do people really have? A lot of times we'll have consumers calling us and they're like, hey, Dan, I'd love to buy a house. And then you start going through all their bills and it's like, you can't afford a house. You know how much debt you have? And they really don't know. So today I'm going to be like the Vegematic guy, and they're selling all this stuff because I got a whole bunch of tools for you guys here. All this stuff is free. I'm going to give you the websites to go to. If you're a homeowner, you need this thing. Okay. So you might have equity in it. You might bought that house in 2020 and you're like, I had to buy this house. FOMO. Everybody's buying homes. So I bought this house. I was able to, come up with the down payments. I'm not selling this stuff. I'm just explaining this to if you're a homeowner, instead of going to all these calculators and things like that, do you realize how much debt you really have? Does it make sense to refinance that debt? Hey folks, Dan Frio here. Let me ask you a question. If you had to add up all your payments, your credit card payments, your car loan, and all the other payments that you have, do you really know how much it adds up to? Most people don't. And when you add it all up, it's probably $1,500, $2,000. Here's the problem. Most of that debt's sitting probably at 14 to 18%. So what do? Does it make sense to really use the equity in your house to pay off this debt? And that's what we're going to go over today. I don't know. I don't know your debt structure. I don't know how much debt you're looking at. You might be looking to get some cash. So here's what I want to do. I want to go over some tools that I'm going to give you guys today. And if you join me today, you're going to get all this stuff for free. So here's what I want to dive into. How much debt do people really have? So today I'm going to be like the Vegematic guy, and they're selling all this stuff because I got a whole bunch of tools for you guys here. All this stuff is free. I'm going to give you the websites to go to because here's the frustration I get. A lot of times we'll have consumers calling us and they're like, hey, Dan, I'd love to buy a house. And then you start going through all their bills and it's like, you can't afford a house. You know how much debt you have? And they really don't know. So interesting story. My mom passed the other day and I'm going to show you just her right through here. So she balanced, and I kid you not, I can get my brother online if we can get him live here. So my mom passed the other day, but she used to balance to the penny. I kid you not, to the penny. My dad worked in the steel mills. And we balanced at the end of each month. We were down to pennies maybe. So she balanced to the penny. So now I start understanding, okay, what are people really paying with this stuff? Do they really understand how all this works? So I want to just give you the math. So we're going to follow the math behind all this and then you decide. And I'll give you the tools to see, if refinancing makes sense to you or just keep paying the bills that you're paying. So here's how much debt people really have. The average balance, I Google searched all this and just compiled it. I didn't make it up. I'm going to show you a couple different tools that we're going to go through. The average balance, $6,500 to $8,000. All households, $5,000 to $6,000. The typical APR. Now here's what's crazy. APRs, the interest rate you're paying. A lot of people bicker, Dan, I need a 6% rate. No, I don't want a 6.1. You realize the credit card rates you're paying are about 20%, probably on average. If you look behind here, I'll scroll it up a little bit. The average home has between $15,000 and $40,000 in debt. Just think, at 18% rates. How long would that take you to pay it off? We're going to get to that in a second. So here's what I went. I'm like, okay, what are you guys doing to figure this out? And I had tools. I would subscribe to these channels for hundreds of dollars a month and say, okay, give me debt consolidation tools so I can help the consumer get through these things. So if you're watching this video, you're going to be in this demo video that we're going to launch this product. But here's what I found. You go to, and I just debt consolidation calculator on Google. You get debt consolidation calculator. Okay, select my state. All right, kind of corny. Okay, whatever. Go down through here, SoFi. I don't know. That's just taking me down a funnel of something. It's just going to be a marketing ploy. Okay, so let's dive into it. Here's what I want to help you guys do. Let's break down your debt. Okay, the first thing I want you guys to do is understand the debt structure that you had. If you have a credit card, look it up. You might have some that are at 0% interest. I'm going to give you a trick there. If you don't pay the full thing off by the time your grace period comes up of that 0% interest, you're going to pay interest all the way back to square one. And it's going to be a lot of interest. Probably you didn't know that. But most of the credit cards are 20 to 24% interest rates. You don't believe these? Check your credit card statement. I just bought a refrigerator. They had like 12 months cash or no interest. I'm like, I'll finance the darn thing. They wrote up the contract. I signed it and I'm like, the rate was 34.9% if I don't pay it back on time. So I told my wife, we got to pay this back in 3 payments instead of 12 because I don't even want to chance that interest being paid. Personal loans, those can vary from 12 to 18%. And if you went to a payday loan, look at those APRs, you might throw up and say, how is this legal? If you have a car loan, probably 6 to 10%. It's kind of student loans as well. You go down through here, and here's what it adds up to be. You go down through and, okay, I got credit cards, 18 grand, maybe probably the average we went through previously. Personal loans, auto loans, student loans. I'm like, what's the average of a consumer out there? And this was what it came up with. So $1,600. Okay, what happens if you don't do anything? Truly, I'm just going to give you the math behind it. You're going to make this decision on your own. It doesn't matter to me. But the minimum payments, if you make them on all these programs, probably take you the same amount of time as it would to pay off a mortgage. Okay, so let's go. What should you do? Well, does it make sense to maybe consolidate this into a mortgage? It could be refinancing your first mortgage. It could be getting a home equity loan. It might be a combination of the two. So that's what we're going to kind of look at, because what we want to do is make sure you're paying the lowest interest and paying off your debt as quick as you can. This is what this is going to do. So let me show you a tool I just created right through here. It's going to be down below in the description. It's free. If you're a homeowner, you need this thing. Okay. So you might have equity in it. You might have bought that house in 2020 and you're like, I had to buy this house. FOMO. Everybody's buying homes. So I bought this house. I was able to, come up with the down payments. I can make the payments. Heck, the rate's at 3%. So that, it wouldn't even make sense to refinance, but I got, I built a lot of equity in it because FOMO, put my house up 20, 30% from when I bought it. I'm sitting on a bunch of equity, but I really don't want to give up my 3%. Well, you might be in the situation where you bought your house in 2023 when rates were 8%. So what makes sense? I don't know. Let's figure it out. So go to the website down below. I'm going to rehost this here shortly. But what this is going to ask you to do is fill in, tell me what exactly you want to do. And AI is built in this. I'm going to show you how this really works. Going through this, and what are you trying to accomplish? Okay, you're trying to pay off debt, trying to get some money out, trying to do both. Okay, you can do any of these. If you just want to see where rates are, you can click this. It's going to go out to RateWatch 2.2. I'll get to that later. If you're a homeowner just trying to track rates, you can't miss this one. But down through here, let's say we're going to pay off debts. Well, let's say we're going to do both. Let's say I'm the average consumer back through here and my debt was $40,000. Let's say it's 40 grand. And let's get over to see where this takes us. But I want a little bit of money to do some things around the house. I'm going to go sell both. Okay, so Dan, I want $10,000. All right. And I bought at a time when rates were pretty bad. It was 2023, right at the end there. I got a good time. My neighborhood appreciated some, so it worked out pretty good for me. But I can't really make those payments. The payments are tough. But we accumulated some debt getting into that house. We had a lot of bills. During my case, heck, I got in the last year. So here's what I got coming up. I got a wedding coming up in the next 45 days. I had one just last year, and my son. I'm going to be a grandfather 2 times here in the next probably 8 months. Got a lot going on my plate too, so I'm probably going to build up some of these as well. So let's go over and say, okay, here's what I really want to do. I got debt, my credit card debt. I'm going to say, well, what was the average we want to use? 18,500. Let me get rid of this for a second. 18,500, 18,500. Folks, I honestly don't know where this is taking me. $550 is that minimum payment. Wow. Well, that's probably about right. And that's at a 24% interest rate. Let's just keep 22.9. Let's go to the next one. Credit cards. We're going to go down through here. Now we got a personal loan at 9,500 at 14%. So personal loan, 9,500 at 14%. I don't know what that payment comes out to be. Let's figure out if that came out with a payment, $275. We're going to come out with that payment at $275. And if you guys have some scenarios you want to run past me, I don't know where this is going to tell us to do. But it'll give you actually the answers down below here in a second. So then we're going to add our third product. What do we have? What other debt did we have? We had an auto loan, $22,480 at 8%. So we have car loan, $22,000. The payment was, I apologize, $480. I think it was $480. And you can see that I'm kind of doing this live because I would have had this pre-filled otherwise, but I just want to show you guys how it really works. And then one thing, last but not least, we have $35,000 in student loans, 6.5 at $300. So we got one last thing, student loans, $35,000. Okay, so here's what it's going to do. It's going to say down through here, and actually equate it out to basically the balances that most people have. Now you're going to go through here and say, okay, that's how much I have in debt. Are you kidding me? And that's what happens with most people. So let's get to the next piece. Here's where it gets a little interesting. Now it's going to say, okay, based on all this information, here's how much debt you have. This is what your payment is per month on that stuff. $38,000 in interest is what you're going to pay on all that debt. So does it make sense to refinance? Well, here's what this is going to do. Now, we're going to stop here. I don't know what it's going to do because this is taking the data that you're going to feed it in at this point. So let's get to the next step. Now, what I want you to do is scroll to the top and give us the information on your home, or give this the information on your home. So let's make this one pretty simple. Let's say I bought in a great time. The house was $650,000. No, that's unrealistic. $500,000. I put down some good money, financed $200,000. And my rate's it was kind of a bad time, 7.25. It was a 30-year fixed. I bought it right at that bad time. It was November of 2023 when things were pretty bad in the mortgage industry. Well, we'll go to 2022. And if I minimize the screen, it'll show you that. So now it's saying, okay, you have $300,000 in equity. What should you do? Well, here's what it's going to do. What kind of loan do you have now? Well, I'm looking at a conventional loan. Are you eligible for a VA loan? You can click this. It'll give you all those parameters as well. But then the next thing is, what's your credit score? Click it. Okay, you're going to see that. What are you eligible for? What makes sense when this comes to a debt consolidation? Click it. There it is. Okay, so here's what it's come up with within, bam, that much time. Your strategy, you currently have $95,000 in debt, costing $3,020 a month because this adds in our mortgage payment that we're paying now. Okay, so down through here, our average debt is costing us 10.9%. The most logical outcome this is recommend you 30-year cash out conventional refinance. And it's going to show you why. Before, after, here's what your savings. You can click this, see my exact options. Here, let's get to that in a second. But now it's saying based on this, your break even is 4 months. That's a no-brainer. Then you go down through here. This is also going to give you what's the second best option. What's the third best option? Would a home equity loan be better? Maybe, no. Why? Here's the math. Okay, you scroll down through here, you can view more options, but you go up through here, you can also see, let's go down through here. You can see, well, maybe I want to just pay off the house faster. I'm getting rid of all this debt. I'm saving a lot of money. Well, you can do that as well. The option here, a 15-year. Why? It's going to show you right down through here. Okay, it's going to show you all the math. I don't know what your equation is going to be out. You can just test this every which way, what your first mortgage rate is, how much debt you have. If you don't have any debt, you can go back to the other scenario I'll get to in a second. But you scroll down through here and it says, here, why is this my best option? And it's going to explain to you right there on the screen. Then you scroll down, your payoff strategies. These are the accounts that you put in. So now you could say, well, maybe I don't want to pay this one off or this one over here. And it'll give you the strategy. And then what should you do? Well, it'll get back to here and it'll say, well, those are the debts you're going to eliminate. Boom. Look at that. And how much of a savings you have. So this is all the tools that it's going to do for you. So I'm not selling this stuff. I'm just explaining this to, if you're a homeowner, instead of going to all these calculators and things like that, do you realize how much debt you really have? Does it make sense to refinance that debt in something like this? So if you really want to find out truly, does it make sense to refinance? Check out the link down below. I think you're going to be pleasantly surprised on that. So any questions that you guys have here, test it out. It's going to show you down below your savings, the different programs, why this is the best thing for you. The cool thing is when you get down below, you can actually now set things. You're like, okay, Dan, no, this isn't for me. Okay, so then let me know how much do you really want to save each month, and then we'll just track that for you. You can do that right down here below. This piece here tells you how much in closing costs you'd have. And if you go down through here, what's your break-even strategies, the accelerated plans, how much money you'd save, and much more. So I wanted you to go from, having all this debt and trying to figure out, does it make sense to refinance all this debt by using the equity in my home? Folks, I don't know. Only you know, and only the numbers will finally show you that. So that's that program right through there. Now, I got a treat for those brokers out there, or those realtors or loan officers out there. You guys paying a lot of money to track all the stuff that we go over on a daily basis. I got a treat for you today. Check out, there's a link down below, and it'll give you access to right through here. Here's what I talk about on a daily basis. So if you're watching me, you're a homeowner even, and you bought a house and you're looking to buy a house and you're trying to track rates. My name is Dan Frio. I'm actually a loan officer. I'm licensed in all 50 states as well as Puerto Rico. I'm set up with over 30 different lenders. My slogan's one application, one credit pool. We're going to compare your loan over 30 different lenders. Here's what I talk about on a daily basis. I come in each morning and explain the markets, what's going on with the economics with things, and where mortgage rates really going. So I created this right through here. I'm like, what do we really need? I don't need all these tools. I don't need all these, things. I just need this. Where are rates today? Okay, here's where it is. This refreshes every 5 or 10 minutes. It's not live, but at least gives you an idea. Okay, most people think that rates change daily. Well, this is going to keep you up to date on that. Cool thing here is this is also an MBS market. These aren't live. This isn't live data. We're working on that. This is delayed quite a bit, but at least gives you some well, that moved quite a bit. It just refreshed. So did you see that? It was down 9 and went up 12. You guys saw that here live. So the market's doing pretty good based on this. You go over to the stock market. This is the other things we talk about. What's this S&P 500 doing? Oh, it's up. The NASDAQ, the Dow Jones, the VIX, the anxiety levels on Wall Street. What's oil doing? It's down. It was up earlier. And what's Bitcoin doing? These are the things we talk about. The Federal Reserve, what do they monitor? Well, they control the federal funds rate right through here, but they look at the PCE. This is the inflation number they monitor. They look at the unemployment rate, and they also look at the GDP of our country. It's all right through there. And then we also tag it in as the Federal Reserve. They're coming in the next 28 days is their next meeting. What are they going to do? Well, they're most likely at an 84% chance they're going to hold rates right where they are. So that is it for today, folks. So I hope you learned something. If you're a homeowner, visit us at therateupdate.com. We're adding some calculators into this. RateWatch 2.2. This is the tool we have if you're a homeowner just saying, Dan, I don't want to pull out any equity. I don't need to, but I'd really like to track rates to see where they're going because they were down at 5.99 recently. They jacked back up. We thought they were going back to 7%. How low are they going to go? Can I track these? Yeah, you can. Just go to RateWatch 2.2. This is where I'm going to get that Benjamatic. I got all this stuff for you guys today. I'm just giving you the tools. None of this stuff is for sale. It's just if you need the tools to use them, use them. But what this does through here is that you're going to provide us your mortgage information. We're going to track it for you. So you can say, Dan, when rates hit 5.9, call me, text me, email me. I'll do it. You can even put in here saying, Dan, if I can save $300, $400, $500 a month, text me, call me. You can do that as well through this new RateWatch 2.2. Thank you for joining me. But that is it for today. So if you have a lot of debt out there, like the average consumer, it has between $6,000 and if you look behind my head, between $15,000 and $40,000 in debt, you might want to check out to see this calculator if it doesn't make sense for you to refinance and save some of that interest or not. And you can even figure out, okay, if I even save some money each month, if I can really pay off my house quicker, this thing does all this stuff. Check it out. It's free and it's down below if you want to check it out. Thanks for watching, folks.